3, 2, 1. Hey everybody, it's me, the Einstein of Wall Street. We are here with Trade Like Einstein. I am Peter Tuchman, and we're here on the floor of the New York Stock Exchange in the balcony. History is made in this building every single day. Somebody with my long-term experience, I've been here for 137 years. It is my responsibility to help teach you how to navigate this market successfully. Boom!
Ladies and gentlemen, children of all ages, it's the greatest financial institution in the world. I am the Einstein of Wall Street from the floor of the New York Stock Exchange. The ceiling, the floor, quarter for 250 thou at 3 ace. Apex, how are you today? Episode 9875 of What the Heck's Going On. We are back in volatility mode. We know that on Friday, President Xi, you could almost see like a diorama or a cartoon or an animation of President Xi of China and President Trump playing in the playground, talking about rare earth minerals. Maybe I'm going to go home and draw this thing, fighting with each other. This is what I'm going to charge you. You don't want to sell it to me. I don't want to sell it to you, and la, la, la. The narrative got ugly. When you hear China and tariffs in the U.S. mindset, you're going to start to see a sell-off, 2.5%. We saw it way back in Trump 101. Back in Davos, when he said it was the first time we heard China and tariffs in the same mouthful, and we sold off 1,400 points. By the end of the day, we had rallied 2,800 points closing up. We had gone, by definition, from a bear market to a bull market in one day. It changed the whole nature of this whole business, of this economy, of this market. However, where are we now? So Friday, we saw the market sell off, close down 180 at the low. We sold off another 70 handles after the close. However, normally in that case, we would see a continuation and a gap down on the sell-off coming into Monday, but that was not the case. This market never disappoints. What we saw was that the whole narrative over the weekend was not a more aggressive one. It was a tempered down narrative between China and the U.S. And then obviously a lot of the focus was and attention was on the Middle East and the hostage release. So by the time we came in midday on Saturday and coming into Monday, there was more of a positive mode on this and that things were going to be okay. So we came in super positive mode. We came in and the market was a super solid rally. We took back at least half of what we had lost on Friday. Now, that set the stage for Tuesday and Wednesday, which was a little bit of both. Now we're in volatility mode. Right? There was a point yesterday, we opened down yesterday and the market rallied better. There were a couple of big sell-offs during the day, and that continued today, where China said, we found out, the president found out that China was not buying our soybeans. And then we said, okay, you're not buying our soybeans, we're not going to buy your cooking oil from you, we can make it elsewhere. So that's where we're at. They're our largest but most contentious trading partner in the world. Two massive egos playing and talking and having an amazing time together. However, that leaves us at a stage, don't go anywhere yet. That leaves us at a stage of just volatility, right? Contentious volatility in the marketplace. The Dow 1.2 on the tape, the Dow off an odd lot, S&P up 30. I would say up volume versus down 1.5 to 1, not that significant, but the Russell hitting a intraday record high. That means that there's rotation in the market, looking for small cap, looking for mid cap value. That's super important. When you see rotation, that means people are putting money to work. It's constructive buying, and the market's action was constructive. And that's a good thing. I think on the day, look, we opened up, we rallied up a little bit more, then we sold off on some China-U.S. news midday, and then we hit a technical level and we bounced back into the close. Look, it's going to be that way. There are a lot of unknowns in the marketplace right now. We've got a government still in shutdown. We've got President Xi and President Trump going at it with each other between egos, rare earth minerals, and commodities. We don't know where that's going to lead. We don't know what the Federal Reserve is going to do for the October. Are we going to cut? We are in the midst of bank earnings. How is that doing? The Beige Book came out. Looked a little weaker on the economic side. We don't know how that's going to affect everything. So we're kind of driving in the dark here, right? With a little bit, we need to clean our glasses and figure out what direction we are going. With bank earnings solid, Beige Book showing weakness, the government shutdown, a lot of unknowns. We're not getting information. You've got the controversy and the aggressive narrative between China and the U.S. And then we're in the middle of the fourth quarter. Where is the money coming from? Are people buying the market? Are they underinvested? Are they playing catch up? So much. And where do we stand on guidance with cutting interest rates into the end of the year? Look, in my book, that's a lot of fun to be had. A lot of volatility to trade. Solid volume in it. Trading. Look, market's going to go. Is the market going to go up or down, Einstein? Yes, that's the best answer I can give you. Still, AI's on a tear. We're seeing some AMD and some, companies doing some awesome mergers. That is still a revolution that is happening. money being put to work, capex in the trillions. It's extraordinary. There are so many moving parts. This is the Rubik's Cube of financial madness, and we're going to be living it for the rest of our lives. One day at a time. Check out your market. Check out where you want to be. Check out how you want to be invested in this wild, volatile market. But stay steady. Stay focused. And never think that the market can't go down, because there is a big bet out there that we saw that caused that little bit of a wild liquidation on Bitcoin the other day, betting that the market was going to go down. That bet is still out there. So for as many people as thinks that we're in the midst of a bull rally and that we're going to continue and close out with a 7 in front of the S&P and a 50,000 on the Dow, there are people who are betting that this market can't stay where it is. I was with Andrew Ross Sorkin yesterday, talking about the similarities between the 1929 economy and crash and times now, not predicting anything that's going to happen sometime soon. So I'm not a doomsayer here by any means. You know me, I'm a forever bull. However, it's a wild and crazy time. You want to be in it to win it.